But are markets, at least today, looking through the data and focusing on the fundamentals of some of these companies, which do indeed remain strong? Joining us now, I'm pleased to say, Regions Chief Investment Officer Alan McKnight and Great Hill Capital Chairman Thomas Hayes. Alan, let me start with you, because today it does feel like that push-pull where you get economic data, but then you're looking at the Fed or the tariff put and thinking maybe this is actually good news for the market. What do you think?
I think it is. And I think what we're seeing today is that markets may have been oversold a bit as we went through last week, and it was just the absence of information. So now with a little bit more information, when you think, okay, retail sales was maybe not as good, but not horrible, when you hear some of the commentary coming out from various companies, I think it gives a little confidence to investors to realize that it's not as bad as everyone anticipated. And the old Rudyard Kipling, if you can keep your head about you when others are losing theirs, that's what we're getting today.
Tom, weigh in here, because everything that I've heard is there's going to be a lot of uncertainty until April 2nd, but then we're getting clarity around reciprocal tariffs. We may bottom out later on mid-year, and then we rally into the end of the year. How do you think about this uncertainty?
Well, Taylor, I think Warren Buffett said it best: be greedy when others are fearful. And every single fear indicator is completely washed out. The AAI sentiment showed just 19% of retail investors were bullish last week. They bought record puts after the market was down. You want to buy that house insurance before the fire. And hedge funds were record selling stocks in the hole. These are all contrarian indicators, and this is when we look for opportunities. We're seeing the Fed put back in play for June, 82% chance of a cut in June.
And talking about some of the fear gauge, you're looking at the VIX, which is down with a 20 handle, which sort of reflects the calmness, at least today, that we see in the market. So, Alan, I want to know what's on your shopping list, because I think a lot of people last week were getting a little nervous, like, oh my gosh, is the bottom here? Is there more room to run? But on the other hand, people are like, look, everything is 10% on sale now. And if I liked a sweater at 100, I like it even more at 90. What's sort of on your shopping list?
Well, by the way, I like to reinforce that with my 3 daughters. I wish they would follow it more often. But the bottom line is that we still think communication services, we think utilities look cheap here, and it's all about the earnings. And I think we're going to see, as we get into first quarter earnings season, if you can continue to buy companies that are delivering earnings in excess of 10, 15% growth, it pays to go shopping when things are on sale. And we're seeing
utilities an AI play still?
It is. And I think that's where utilities is now a growth name. And if you had told me 10 years ago I would buy utilities for the growth, I would have said you're crazy. But today you look at the type of growth they can generate because of data center growth, because of AI that is fueling that data center growth. And suddenly you're really seeing an opportunity there, particularly in the southeast part of the country where you're seeing continued population demand as well.
Tom, I'm not calling you crazy, but a lot of people might call you crazy when I look, and one of your top picks right now is Intel. This is a great storied American company. They just announced, I believe, on Friday, a new CEO. But this is a company that has struggled. Why Intel, and why Intel at $25?
Well, Taylor, Lip-Bu Tan is the new CEO. He came from Cadence Designs when the stock was down 86% in 2009. If you had invested $1 million when he became CEO, by the time he stepped down 14 years later in 2023, that $1 million became $68 million. Lip-Bu Tan is a miracle worker, and Intel needs a miracle, and I think they're going to get it. You know, the key thing here is NVIDIA's growth rate has decelerated, not for lack of demand, but for lack of supply. TSMC is at capacity. Intel in the background has been building up the fabs. They're ready for prime time. NVIDIA is testing chips. Broadcom is testing chips. And Lip-Bu Tan is going to spike the football in the end zone. We're very excited about Intel. And it's trading just a couple bucks over tangible book value. So if they liquidated the whole company today, you get most of your money back. And if he does what he could do, which we know he can, it could be a double and beyond in the next 12 to 24 months.
But Tom, a lot of people are thinking that Intel, I mean, I've heard not rumors, but, words used like they're selling the car for parts, right? Where you had rumors about Broadcom, TSMC coming in, looking at different portions of the business. Do you like it as a sum of the whole, or do you like it as different parts?
Look, if they sell it off for parts, we probably get 35, 40 bucks when all is said and done. Lip Bhutan has stated he's going to run this business. He's not interested in a fire sale. He's going to turn this into a multi-bagger. Everything is there. Actually, Gelsinger did lay the foundry framework to move ahead and to supply the NVIDIAs and the Broadcoms of the world. Lip Bhutan is going to finish that execution at the 5-yard line, take it in for a touchdown. This is going to be, look, it was on no one's bingo card at the beginning of this year that NVIDIA would be among the worst chip producers this year in terms of performers. And Intel is now the top performing semiconductor company for year to date 2025.
Okay, I think people might say that says more about NVIDIA than it does about Intel. We'll see. But Tom, I do like the bull call. Alan, you talked in break with me about just diversification is winning right now. Fixed income, international. And this sort of plays into what we heard from Scott Besson over the weekend about how ignore some of the volatility. It'll all work out. Take a listen to what he had to say.
I can tell you that corrections are healthy, they're normal. What's not healthy is straight up, that you get these euphoric markets. That's how you get a financial crisis. It would have been much healthier if someone had put the brakes on in 06, 07. We are going to have a transition, and we are not going to have a crisis.
So again, corrections are healthy, but if the diversification for you is what's key within navigating the correction.
That's exactly right. Secretary Besson is spot on in this idea that it's very normal for markets to go down. So if you look over history over the last 100 years, you should expect a 10% correction every year and 5% corrections every year. So it's not abnormal. It's just that we've had these two excessive years of 23 and 24 where everything worked. It's going to grind a little more this year as investors start to understand what's happening. And the only free lunch investing is diversification. So international has performed better. Fixed income has performed better. So a fully diversified portfolio actually looks very good right now. And then to your point earlier about buying some things on sale, you can now actually rebalance a little bit to pick up some of these domestic names.
Tom, final thoughts to you.
Yeah, look, we continue to like China. And people said we were crazy when we were buying Alibaba in the 90s, in the 80s, in the 60s. Now it's over 145, going to over 200 over the next 12 to 24 months. I'm telling you, Intel is going to be the exact same way, Taylor. They're calling me crazy now. When it's at 40, 50, 60, they're going to say, wow, is it time to buy at 60? And I'm going to say, yeah, it's probably going higher. Lip Bhutan is a miracle worker.
Why don't we make crazy good again? Sometimes my husband calls me a little crazy. And look, I didn't turn out so bad. So maybe a little crazy isn't so bad. Really appreciate both of you, Alan McKnight and Thomas Hayes. Please come back and join me.
Thank you, Taylor.
Meanwhile,